morning. Welcome back. Okay, let's get right to it today because we have a lot to cover and some of it's really fun. So, when most people think about retirement investing, they picture the usual lineup: stocks, bonds, mutual funds, maybe ETFs. And for many investors, that is the only world they ever see. But what surprises a lot of people is that retirement accounts can sometimes hold much more than that. A self-directed IRA can open the door to a much broader range of asset types, including some that most people have never even considered for retirement planning. And no, we're not just talking about rental houses or gold, although those are very popular. We're talking about things like farmland, timberland, tax liens, livestock related investments. You heard me right. Mineral rights, equipment leasing opportunities, and even certain royalty interests. Now, that does not mean every unusual investment is a good idea. It does not mean every investment is simple. And it definitely does not mean every asset is automatically allowed. But it does mean this: if you're using a self-directed IRA, understanding the range of possibilities can help you ask better questions and make more informed decisions. In this video, we're going to walk through some of the unusual alternative assets that may be possible in a self-directed IRA, why some investors are drawn to them, and what account holders need to keep in mind before moving forward with niche investments. Before we jump in, a quick reminder: you should always do your own due diligence and work with qualified professionals when evaluating any retirement investment. Let's start with the basics really quick. An alternative asset is usually any investment that falls outside the standard menu offered through a typical brokerage IRA or employer plan. In a regular retirement account, you usually see publicly traded investments like stocks, bonds, mutual funds, ETFs, and similar market-based products. A self-directed IRA can expand those options. Depending on the account and the investment, that broader universe can include real estate, promissory notes, private placements, private stock, precious metals, and more. And more is what we're talking about today. However, once people learn that broader investing is possible, the next question is often this: how broad are we really talking? And that is where things start to get interesting. There are a few reasons people become interested in unusual or niche alternative assets. Sometimes it's because they have experience in a specific field. Maybe they know agriculture better than they know the stock market. Maybe they have worked in commercial lending, land use, energy, or specialty real estate. Maybe they understand how certain assets generate income and want to explore whether retirement funds can be invested in areas they already know really well. For other investors, the appeal is diversification. They may want exposure to assets that don't look or behave like traditional market investments. They may be interested in something tangible, contract-based, income-producing, or even connected to a specialized industry. The key thing to remember is that familiarity can be helpful, but it's not a substitute for due diligence. An investor may know an industry well and still need to carefully evaluate whether the investment structure works inside of an IRA. Let's see, let's start with one of the most unusual examples. Some investors participate in agricultural investments tied to cattle, dairy cows, breeding operations, or livestock-related income programs. That's probably not the first thing most people think about when they hear the phrase retirement account. but it is a useful example because it shows how broad alternative investing can become. Livestock related investments are often private, specialized, and highly dependent on the exact structure of the deal. They may involve ownership interests, contractual income rights, or private offerings tied to agricultural operations. Because these investments are niche, they also require a higher level of due diligence. Investors need to understand how the investment works, where the returns are supposed to come from, what risks are involved, and how the asset is valued and how the arrangement is documented. Next, let's talk about agricultural real estate. A lot of people think real estate in an IRA means a rental house or maybe a commercial building. But farmland, orchards, vineyards, other agricultural land can also be part of this conversation. This may appeal to investors who want land-based exposure, income tied to leasing or production, or an asset class they understand personally. But with agricultural assets, there can be a lot more going on than simply owning land. You may have a lease structure, production cycles, water access issues, land use considerations, and local market factors that affect how the property performs. And as with other IRA-owned real estate, the IRA must own the asset. The IRA must receive the income, and the IRA must pay the expenses. Personal use is not allowed. Let's see. Timberland is another example that tends to surprise people. This is a long-term hard asset that may be connected to land ownership, harvesting potential, and future resource value. Some investors like the idea of holding something tied to natural resources instead of traditional financial markets. But timberland is not just land sitting in the background. It may involve management considerations, harvest planning, regional demand, and environmental issues, insurance considerations, and asset valuation questions. Again, it's a reminder that a unique asset may be possible, but that doesn't always make it simple. Another category that falls into the unusual asset bucket is oil, gas, and mineral rights. These investments might involve royalty interests, resource-related income, mineral ownership, or participation in private energy deals. This is an area where people often need to slow down and really understand what they're buying. Are they buying a direct interest, a royalty stream, a private entity interest, a land-related right, a speculative exploration opportunity? The term may sound straightforward, but the details matter a lot. These investments may also involve complicated legal, tax, and operational issues. So they are not something most people should jump into without understanding the documents and the risks. Other end of the spectrum, water rights are one of those assets that many people have never thought of as an investment at all. But in some markets, water rights can hold real value. They must be attached to land, leased, transferred, or treated as a distinct property interest depending on the state and the legal framework. This is a really specialized area, but it is a useful example of how alternative assets can include rights, contracts, and legal interests, not just buildings or commodities. Now let's come back to real estate, but through a niche lens. Some self-directed IRA investors are drawn to mobile home parks or RV parks rather than single-family rentals or standard commercial properties. These assets can have very different business models. They may involve pad rent, occupancy dynamics, utility structures, infrastructure issues, and local demand patterns that do not look like a normal rental property. It's still real estate, but it is specialized real estate. And that's an important distinction because specialized real estate often requires specialized knowledge. Another type of niche property includes self-storage facilities, parking lots, garages, and similar specialty use real estate. These are not always flashy investments, but they show that real estate investing inside of an IRA does not have to follow the typical script. Just because something is property doesn't mean it behaves like residential housing. Different property types have different customer behavior, operating expenses, competitive pressures, and risk factors. Here's another one people don't usually mention in retirement conversations: billboards and sign-related income. Some specialty real estate investments involve outdoor advertising structures or land leased for signage. That income may come from lease arrangements tied to visibility, location, and advertising use. It's a niche area, but it is one more example of how broad income-producing investments can be. Some investors gain exposure to equipment-related income through private lending or leasing structures. This could involve machinery, agricultural equipment, industrial equipment, or other business use assets. Now, this is not about using your IRA to personally run a business or personally operate equipment. That would raise entirely different issues. This is about private investment structures where the retirement account is invested in a deal connected to equipment leasing income or asset-backed cash flow. The distinction matters. Let's see. Tax liens and tax deeds are another specialized category. These are often connected to real estate, but they're very different from directly owning investment property. A tax lien may involve earning interest or pursuing certain remedies under state law if a property owner fails to pay taxes. A tax deed may involve acquiring ownership through a tax sale process, depending on the jurisdiction. Now, because rules vary from state to state, this is an area where investors really need to understand the local procedures and timelines. Do your due diligence. Get help if you need it. Some investors buy distressed debt or non-performing mortgage notes at a discount. The idea may be to collect payments, restructure the obligation, enforce rights tied to the debt, or eventually recover value through legal processes. This is definitely not a simple or passive strategy for most people. It requires a strong understanding of documentation, borrower risk, servicing, and enforcement procedures. But it is another example of a niche asset type that some self-directed investors explore. In addition to real estate lending, some investors look at loans made to businesses through private note structures or similar arrangements. These can vary widely in risk depending on borrower quality, underwriting, collateral terms, and documentation. As with any lending investment, investors should understand exactly how the note works, how repayment is supposed to occur, and what protections exist if things go wrong. Finally, there are niche use real estate assets like marina slips, aircraft hangars, and other specialized properties. Those may not come up often, but they are a great reminder that real estate is a broad category and that not all real estate investments look the same. The less common the property, the more important it becomes to understand demand, management, expenses, and exit options. So, just because an asset is unusual does not mean it's prohibited. This is a very important point. A self-directed IRA is not limited by what is popular. It is limited by what is allowed under IRS rules and that it is handled correctly. An unusual asset is not automatically prohibited just because it's different. At the same time, an asset being unusual does not make it a smart fit or an easy investment. And sometimes the issue is not the asset itself. Sometimes the issue is how the transaction is structured, who is involved, how the money flows, and whether the account holder receives some kind of improper personal benefit. That is why compliance matters just as much as the investment idea. The more unusual the asset, the more careful investors usually need to be. Here are a few reasons why. First, valuation can be harder. A niche asset may not have an easy market price or readily available comps. Second, liquidity may be limited. Some unusual assets are hard to sell quickly. Third, documentation may be more complex. The structure may involve contracts, private entity documents, title issues, or specialized legal terms. Fourth, we're on 4, right? Fourth, operations can be more complicated. Some assets depend on management, industry conditions, or highly specific market factors. And fifth, compliance risk can increase. The more creative the asset, the more important it becomes to make sure the IRA structure is being respected at every step. Before we wrap up, let's cover a few important reminders. Not every asset is allowed in IRA. Certain assets, including life insurance and collectibles, are prohibited. You cannot personally use an IRA-owned asset. You also need to be aware of disqualified person rules. Certain transactions involving close family members or related parties can create prohibited transactions. And if the IRA owns the asset, the IRA must receive income and pay the expenses. Those are foundational rules, and they apply whether the asset is a rental house or something much more unusual. Okay, let's go ahead and wrap this up. One of the most interesting things about self-directed IRAs is that they expand what retirement investing can look like. For some investors, that means real estate or private lending. For others, it may mean looking at niche opportunities like farmland, timberland, tax liens, specialty use property, and other less familiar assets. The broader your options become, the more important education becomes too. A self-directed IRA can give you flexibility, but flexibility always comes with responsibility. The goal is not to chase unusual investments just because they're unusual. The goal is to understand what is possible, what is allowed, and what requires deeper review before making any decisions. If you want to learn more about self-directed IRAs and the wide range of alternative assets they can hold, Mountain West IRA is here to help with the administrative side of self-directed retirement investing. Visit us at mountainwestira.com. Call us at 866-377-3311, or use the QR code in the corner to go ahead and set up a time to talk that works best for you. And if you found this video helpful, please like, subscribe, and share. You can also leave your questions or future topic ideas in the comments below. We love hearing what people want to learn more about. Thanks for watching, and we'll see you in the next educational video from Mountain West IRA. Thank you. Bye-bye.